Thanks for tuning in to this episode of the Resilient Advisor Show. My name is Jay Coulter, and this is part of the How I Serve series, where I get the opportunity to interview top financial advisors who share how they're making a difference in the lives of their clients.
Our mission at Resilient Advisor is to have a significant impact on the retirement crisis by educating and empowering financial advisors to better serve their clients. In the new Resilient Advisor series, How I Serve, we interview top financial advisors who are making a difference in the lives of their clients.
Are you struggling to hold your team accountable? Do you struggle getting them to see your vision and drive results? The Resilient OKR system for financial advisors could be your solution. OKR is an acronym for Objectives, which are your big inspirational goals, and Key Results, which are how you and your team are held accountable. This is the Silicon Valley method that drives growth at major companies such as Intel, Google, BMW, and Disney. Move your business results away from opinions and measure it with data.
Pick up your complimentary access to the Resilient OKR system for financial advisors by visiting resilientadvisor.com/OKR.
Justin Castelli, founder of RLS Wealth Management and well-known social media presence, joins me for this installment. This is going to be longer than most of our episodes, I can tell just from our pre-show call. He has a lot to talk about. So we're going to go over how he started his firm, RLS Wealth Management, how he serves his clients, which is what we do on every episode in the series. But then we're going to go a lot deeper because Justin is excellent at marketing. We're going to cover how he leverages social media from Twitter to YouTube. We're going to talk about the advisor growth community and how he serves other advisors through that platform. And then lastly, we're going to talk about his new course for advisors, where he teaches them how to use the subscription method. Justin, I'm glad to finally get you on the show. Thanks for making time.
Jay, thanks for having me. I've been watching these and just waiting for my turn. So I've been looking forward to this all week.
You are too kind. So the premise of the How I Serve series is for advisors to talk about how they built their business and then how they thoughtfully serve their clients. So let's start with that. How did you get started?
So like many of us in the profession, it's been a wandering process. I came into the business out of college, really going through school, not knowing what I was going to be. And then long story short, found this profession that seemed like a lot of fun, getting to help people solve problems. And I was hooked right away. So the journey began at an insurance firm where many of us start. Was there for a year, went to a bank for a year. I spent seven and a half years at a 403B company. And that was really where I began to understand where I wanted to go as an advisor. I knew I didn't want to work for a big corporation. I knew I wanted to get to the independent space. I knew I wanted to do social media and content creation, but I couldn't there. The plan was always to leave that company and then start my own, but I made an intermediate stop at an independent firm in town. And then in 2015, launched my firm. It was RL Wealth Management at the time, and it's progressed because the initials of the name are after my three boys. So when I started, I only had Roman and Leo, and now there's Silas. So it evolved, got to rebrand, and that's how RLS Wealth became to be, was really wanting to control my destiny, wanting to be able to do things on my terms. And I knew that the only way that I'd be able to do that and do it my way would be to be in the independent space, which ultimately led to owning my own firm.
That is a fantastic story for how you came about naming your firm. It looks like Tyrone Ross is watching and he wants to know why you get a long episode, but Tyrone gets a monthly show. So
I say Tyrone's are all the time. So tell him to get out of here with that nonsense.
All right. So you launched your firm. It's named after your three children. And when you launched, are you launching as a straight RIA? What platforms are you using? What technology are you using?
Yeah. So when I launched RIA, straight RIA, and part of that was I didn't have a lot of, I'm not going to be the advisor that says there's one perfect model. Actually, I hate when people go that direction. I think that advisors can serve clients and put them first, regardless of where they are, as long as we have good moral code. But I started RIA mainly because it was the easiest way for me to get started. I didn't have a lot of insurance business, which would be the one area doing term that I would have done. And I didn't do a lot of commissions beforehand. So that was the easiest way to get started. And that was the way it went, aligned best with my business model. But I got on with TD Ameritrade. I kind of lucked into that. Leading up to launching my firm, like 2 years prior, I had a conversation with TD Ameritrade and had a bigger book of business that I thought might follow me. And luck would have it that I was still in their system. And I think they thought that number I had in the past was what I was going to start with, and it wasn't. So I lucked in and said, hey, I promise you I'll get to the levels you need me to be at, but like, you've got to let me on. We've already gotten this far in the process. And they did, and I did, and it was great. So I started with TD, and then real quick run through the tech stack, because a lot of advisors like to know what everybody's using. I use TD and Altruist as my two custodians. I see Altruist becoming a
Can I stop you for a second? I'd love to go a little deeper on Altruist. So new custodian to the marketplace in the last couple of years. The Wirehouse viewers and listeners aren't going to be familiar with it. They can't even get access to it. What's, in your opinion, is the value prop for Altruist for those of us in the independent side of this business?
The big value prop for Altruist is just the way that they're building the new custodian platform on new technology. So think digital account opening, same day funding. It's a lot quicker that the bigger, older custodians, they don't have that technology, and there's little incentive for them to go back and rebuild. It would be costly. So they're building from scratch. One of the things we'll talk about is kind of brand, and I love the brand of Altruist as well. I love what they stand for. The reason that Jason Wank started Altruist, and like, I'm not a part of the company, I'm just a big fan of it, but the reason he started it was to help other smaller advisors, if you will, be able to get on a platform, have great technology, and provide great planning to more people. And if you have more advisors that have access to a custodian that maybe aren't big enough for the big custodians, they can serve communities and niches that are being overlooked today. So it's a way to bring more advice to more people. But it's got everything that you would want. No commissions. They have fractional investing. So you think some of the good stuff you see with the Robinhoods and the Publics of the world combined with the big custodian support that you have in the bigger ones, and those two together combined are what Altruist is bringing. And it's great, like user experience. The technology is very beautiful, very simplistic in the way it looks. So if you're a fan of Apple and Tesla, their design, you're going to like Altruist. And they keep on rolling out more and more features that'll make it even better in the future.
They're one of my custodians as well. In fact, I keep my IRA over there because they make it so simple. And I agree with you that they are going to be part of the future for sure. So what else is in your tech stack?
Yeah, so for CRM, I'm using Wealthbox. I use Advizon kind of as my company hub, but it's also client portal and performance reporting. So Advizon is a little bit newer. If you're familiar with Orion and Black Diamond, it would compete with them. But I've been using Advizon for a while, and the growth that they've made as far as their improvement to technology, improving the CRM and workflows is great. I do keep my CRM separate only because I like the idea that if I ever wanted to change from Advizon, maybe I don't need Advizon anymore. Don't worry, guys, I'm not planning on anything. But with Altruist brings me everything that I need, then I don't have to worry about what happens to my CRM. It's kept separate. So I like the idea of the CRM being separate, allowing me as a business owner more opportunity to make changes if I need to my tech stack. So I use Advizon for client portal, performance reporting, and everything in there. I use Riskalyze. I use Y charts and Quanti kind of to go the investment side. When we think about financial planning, which is the core of everything, I use Right Capital for planning. I use Helios Plans to help out with estate planning, which is a pretty cool newer company. Basically, you can leverage an online portal to be able to help your clients get the basic estate planning documents, wills, living wills, power of attorneys, creates a living trust for a real affordable way. And the advisor can actually absorb that cost if they want to. Using Holistaplan when it comes to tax planning. And what else? I use Advice Pay for subscription, which we might get into as we talked about earlier. I use My Rep Chat for text archiving. It's harder to get clients to not text message you, and we have to archive everything. So My Rep Chat is real great software that just basically you get a phone number. It's an app on your phone, but then you can text message and it can archive everything. And a nice thing about it as well is my assistant, or my director of operations, she's more than an assistant. She can go into the web-based My Rep Chat and send birthday text messages on my behalf. It comes from my phone number, but I don't have to do it, and she has access to it from the web. So those are the main tech stack. I've made a list of them. Looking at anything else. Oh, speaking of Tyrone, when OnRamp is up and going, OnRamp will be a part of the platform as well, because I do see myself being a firm that will offer cryptocurrency and Bitcoin to clients. And full disclosure, I am an investor in OnRamp. So it would have been there even if it wasn't the case, but it is a cool opportunity to be a part of that start as well.
Yeah, they're doing great things at OnRamp. A few things to unpack from your tech stack. I love Wealthbox. I don't have a commercial relationship with any of these folks. Heavy Wealthbox user. I'm learning with some of the breakaways I'm working with now, Wealthbox does have a little bit of limitations if you're going to use something like Orion,
Mhm.
but it works very well with Advison, I have found. Advison's been newly introduced to me. I did a demo and was absolutely blown away. I feel as though they have almost the same capabilities as Orion with half the price. Is
Right.
that your experience?
Yeah, and I have nothing but good things to say about Advison. They have great support. The people there are awesome, very quick to respond. Yeah, and what you're seeing today when you do a demo is not where it was even just 1 or 2 years ago. They have done a lot to improve it, to make it better, make the workflows better. One of the reasons I went to Wealthbox was the CRM was a little weak back in the day, but the CRM now is fully functional. And I've actually thought about maybe I do want to consolidate it, but I don't want to ask Darlene to go through the process of merging the CRM. So I've bought into, let's keep the CRM separate just to give us flexibility in the future, because you'd never know what's going to happen.
That's right. I'm not going to lie. I was a little impressed with the Advison CRM, but I'd have a hard time breaking away from Wealthbox. I'm just addicted to it. So it runs my life. So Alex is watching us today. He says, thanks for sharing your tech stack, Justin.
Happy belated birthday to Alex as well. I forgot to send him a text, so I'm sorry, bud.
All right. So I'm going to pull up a screen because you have so much great visual digital content in the marketplace. And I want to talk through some of this. Now, to a lot of folks watching, they don't have the ability to put out this type of content. But for those that do, or more importantly, those that are thinking of breaking away from a wirehouse, this is the type of stuff that you can start to do with your brand. Now, before we even get to your firm, you have your own personal website that talks about things that you are passionate about and provides links to all of your various enterprises. Tell particularly podcast listeners that can't see it, what is the idea behind your personal website?
Basically, the personal website, because I do have my hands in so many things, it's just a fancy link tree. I could very easily have a link tree link that could link out to all these things, but I did want to have something that was more professional. I have aspirations in the future of doing more public speaking, and I feel like this is something you need if you're going to hold yourself out as an expert and a public speaker. The main reason that I started that justincastelli.io website, which it's very weird to have a website with your own name. If I feel very egotistical saying that, but there's nothing else than for myself. But it was really to have a way to have content separate from RLS Wealth for advisors. So on there's a blog that is for advisors called The Advisor of Tomorrow. I have a newsletter for financial advisors that is a spinoff of that as well. But that was really meant to give me a place that I could help other advisors grow. But then also, if a potential client found it, they could find their way to RLS Wealth very easily. And I need to redo the website. I actually am working with somebody to kind of revamp it just to bring it to another level when it comes to the branding side of things. But yeah, it's just basically a fancy link tree.
So Justin, my website used to be jcoulter.com. My email address is j@jcoulter.com. I absolutely hate it. In fact, I moved Resilient Advisor to resilientadvisor.com recently. I just can't bring myself to move the email. So I can relate to what you're saying there. But the reality is it helps. It helps when it's your own name. It helps with SEO and brand recognition. And as a brand enthusiast, like, I could see why you would use your own name.
Well, and I also think that at a certain point, you have to get over the imposter syndrome of who am I to have my own website. Carl Richards has a quote that I love that just says that, I butcher it all the time, but basically, if you believe that the service you provide as financial advisors or to help other financial advisors can make an impact on people, you have an obligation to tell your story. You have an obligation to be out there marketing and putting yourself out there. And it takes a little bit of overcoming that fear. And once you get there, it's okay. So to your point, if I have a website that's designed to be a place to find everything that I'm doing, what else would I call it other than my name? And then to your point, it helps with SEO as well. So it's just, I want to never become the person that talks third person. And I feel like the website name starts to put you close to that level.
I know. The joke in my house is we call the business jcoulter.com, and that's really meant more to bag on me than to brag, for sure. So let's move over to your firm, RLS Wealth's website. This is one of the most visually captivating websites I've seen with an advisor, and I've seen a lot. Walk us through the thought process of the landing page when you get to rlswealth.com.
First off, I have to shout out my web designer, Andy. He is phenomenal. So kind of going through the progress of my company, when I launched and it was just me and then I hired Darlene, I really just viewed it as a solo practitioner's practice. So like I had a website, but it wasn't anything great. It was just basically I needed a website so people could find me and they could see that I was a real business. But then last summer I hired another advisor. So Thomas came on board and I realized, okay, now I have a firm now. So now this firm needs to represent everybody, not just me. And I never wanted it to really to be about me. So this is kind of when I started to get into more and more looking at how can we establish a brand for a financial advisor and for a planning firm, and what does that look like? And I pull a lot of inspiration from outside of finance. So looking at direct to consumer brands, looking at the fintech space, looking at something like Altruist, like that's the vision that I want. So working with with my web designer, I said, hey, I want something that looks nothing like a financial planning website. If you come to it, you have to read to figure out that this is a planning firm, which maybe that is not a good thing, but I want to stand out and I want it to be different. And I also want the story that you see on that website to speak to the people that we want to work with going forward. When I first launched the firm, I didn't have a niche. I hung my hat out on as I had this barbell model, subscription model for young professionals, traditional AUM for retirees, which is who I worked with. And I worked with both sides of the career cycle. But as I started growing and was looking at my brand and realized who I really enjoyed working with, there's a mindset that I really like enjoying working with. So I wouldn't categorize it only as entrepreneurial, but the people that I want to work with and I want the firm to work with going forward are entrepreneurial. They're risk takers. They're not, reckless with the risk taking, but they think outside the box. And basically, we want to help people define the life that they want to live on their terms and then build planning to speak to that. And I wanted my website to speak to that. So you see a lot of pursuing passions and purpose on the website. For the people we want to work with, I think those words will resonate and they'll see themselves on our website. So, a lot of our websites as advisors we just put them out there because we're supposed to have them and it's a business card. But I would love to see more advisors think more about who do they want to attract? What's the story that those people want to live? And then craft your website to speak to them. And then eventually the website becomes an extension of your brand, which I don't think a lot of advisors actually think about branding and what that means.
No, they don't at all. And I got to tell you, when people ask me for website ideas, I usually send them over to your partner, Taylor Shulte's website, because it looks fantastic. Looking at your site and preparing for this podcast, what stuck out to me is it reminded me of all the social media content of yours that you put out that I've seen over the years. But then when I dug on it, I want to touch on one aspect of your website that to me seems unique. At the top, next to about, you have relationships. And in there, you clearly articulate exactly the 3 types of relationships that you can go and have with your firm. For podcast listeners, the first is called Wealth Fusion, and this is for aspiring professionals and growing families with less than 350 in AUM. The second option is for folks and he calls this wealth management, and that's for those with dynamic life, family, and financial needs over 350 in AUM. And then a third category called Wealth Genesis. Justin, walk listeners and viewers through those 3 different types of clients.
Yeah. And one of the things that I really like about that page, and obviously I like it because it's my website, but everything you want to know, everything a client wants to know is there. And what they want to know mostly is what's it going to cost me? So the fees are there. You know exactly what the costs are. You have to go a little bit more detail on the subscription model as far as what level of service you get. But the relationships, I still want to maintain the ability to work with anybody that comes to us that I want to, regardless of where they are in life. So the Wealth Genesis, we don't really market it that much. It's basically designed to be a robo-advisor. With TD Ameritrade, they have iRebow. With Altruist, they do rebalancing on their own. I basically want to be able to say, hey, you don't need planning. You have a small account. We'll manage the account for you. You'll get the same portfolio as our subscription clients, same price. And we'll feed you some content along the way, but we'll at least be able to take that off your plate if you don't want to do it. My goal was let's charge the same as the other robo-advisors out there. But if somebody really likes what we're about and wants to be a part of the RLS Wealth family, but they don't need full out planning, they can't afford it quite yet, let's still extend an offer for them to be a part of the family, and then they can grow into it. So that's the first lower end.
Can I stop you for a second? So I know that a lot of my listeners are thinking, well, hang on, that's going to create a service nightmare. And I've been taught my whole career to only work with 150 families. What are your thoughts?
I think that you can scale a lot of it with technology. I think a lot of it, as far as service goes, these are clients that are only going to get an annual email for a review if they need it. And really, I don't really want to grow that I just want it there just in case. So it's on the website to show that we want to work with anybody who needs it, but I'm not really targeting people who are there. It's kind of more of just if it happens to be. Now, if it really caught off, then maybe there would be a little bit more service behind it. But we can still service those clients month to month by sending them content curated for them. So a monthly newsletter to them. If we have enough clients in it, which we only have a handful in there right now, we just started it last year. And again, we're not marketing it, but as it grows, the plan is to do a monthly email where they can send questions in, and then we'll do a video to answer a bunch of those questions. So it's not direct access to us, but yet they can still send us a question. We can answer their question, help them along the way, and then have all of the content that we create fed to them as well, giving them information. So we can leverage our content. We can take a little bit of time every month to do a question video and give them a lot of attention that they wouldn't get elsewhere. But you're right. It could be a service nightmare, but the expectations are you don't get access to us to ask questions. We're just doing portfolio management off of what your risk-realized score is. That puts you in a portfolio. You don't have to worry about the investment side of what you're doing. And we're going to give you some resources to help educate yourself along the way.
And for what it's worth, Justin, I agree with you. Everybody needs help. And the more people you can help, the better. That's really an old school wirehouse mentality. So, all right, let's talk about the other two value props that you have for clients.
So Wealth Fusion, that was the thing I was so excited about when I started my firm, was to have the subscription model. And I almost named my firm Wealth Fusion, but then got some feedback that it wasn't, the people wouldn't know what it was. So I still love that name. I'm going to make it the subscription model relationship. And so what Wealth Fusion is, we have two levels of subscription, and think of subscription models of just like Netflix, Spotify, any other subscription. It's a monthly fee based off of either, if you're a young professional, we charge $150 a month plus 35 basis points if you have us do the investment management for you. If you are a family with kids, we charge $300 a month plus the same 35 basis points, which if you notice back on the website, it's over 350, under 350 in AUM. When you get to 350,000 in AUM that we're managing for you, that graduates you into the traditional AUM wealth management model. And I don't think AUM is going anywhere. I think clients still prefer to see the cost come out of the investments rather than paying us $300 a month. So it kind of also gives them a goal to stretch for. But in those models, what I've done, and you and I were talking about beforehand, I'm taking what we do in the wealth management model, the deeper planning, the more focus on taxes, getting deeper into estate planning. There's more complex investment management when you're in wealth management, and scaling it down in a way that we don't have a service problem because it's not as in depth, but the philosophies are the same. So we're taking the same beliefs when it comes to financial planning, looking at everything from budgeting if necessary, but to making sure we're living the life we want to live, cash flow. We're looking at retirement, all those things. We're still looking at it, but we're just not going in at as much depth. With the subscription model, once a year is how often we meet in person for an annual review at $150. At $300 a month, it's twice a year. So the service level becomes a little bit less, but I'm of the belief that while you're accumulating, you don't need as much attention from us. The whole time you have unlimited access to us if you need it. So we have our annual meeting, but if you get a promotion, if you have a baby, a life-changing event, we'll have another meeting if we need to. But if everything's going as planned, then we'll just meet once a year. No reason for you to pay for more than what you need. And when things get more complex, you'll graduate up. And then the final step is just your traditional wealth management. So we're meeting twice a year. We're doing more in depth on the planning side in both of the higher subscription model, the $300 a month. And when you get to wealth management, I mentioned we use Helios plans. We actually cover the cost of the estate plan being created if we need it. We're using Holistic plan on those two levels when it comes to tax planning. And then when you get to wealth management, we're starting to implement some individual stocks in with the ETF portfolios, a little bit different ETF portfolio. While you're in subscription, it is model based. So it is risk level determines what funds you're in. And it is just a model. Where when we get to wealth management, I wouldn't say it's customized, but the portfolio gets a little bit more complex. There's a tactical component for retirees. So there's more going on there that warrants more of our time. But the whole goal, going back to all of it, the whole goal is, which is why I love the subscription model, is it's just taking all of the focus in your expertise and offering it in a smaller package. You're not sacrificing the quality, not sacrificing all of the attention, but just not putting as much time, effort, and energy in it to a level where it doesn't negatively impact the client, but they're also not getting more than what they really need. And then you can offer it at a lower. And this is a perfect firm that has a senior advisor that's been in the business for 30 years, and then a junior advisor that's coming up behind. Create a subscription model for that junior advisor to run with his or her peers, people that they know what's going on. Get those young professionals in the door today so that, as you and I were talking about, that wealth transfer that we know is all coming, you already have the recipients of that in the door. Versus if you're going to continue to focus on just the retirees, eventually we know they're going to pass away. And if you don't have anything behind that, what business do you have? Versus my firm, we have a bunch of young professionals, and those young professionals are going to inherit those assets from those older firms. And if we do a good job, they're not leaving us because they have greater net worth. And if they need more service, we have that model in-house already.
Yeah, I want to go a little deeper on the subscription model in a minute. A couple of pieces of technology that you mentioned, Holistaplan. They were on the show a couple of weeks ago. That technology is amazing. Viewers and listeners, if you're not familiar with it, I suggest going to their website and seeing how they can teach you how and show your clients how to better analyze tax returns. You mentioned Y charts. I'm a heavy Y chart user myself. A lot of my clients that are heavily focused on the asset management side, when they look at it, they cannot believe the resources that are available inside that platform. And I got to tell you, Tyrone Ross must not be listening to us because he wants to know when you're going to plug OnRamp.
I already got you, Ty. I got you that in like the first 5 minutes, my friend.
But great way to work in a second one, Tyrone, and well worth.
He knows what he's doing.
He does. He's a pro. All right, so I want to show viewers, listeners, you're going to have to visualize this, something that Justin puts out on a regular basis. So I'm pulling up his YouTube account, and this is something that he calls his weekly rewind. Is that what
weekly
it is, Justin?
Tape.
Yep, remix tape. I'm going to play just the beginning clip here.
Sunday, March 21st, 2021. This is all about your Benjamin weekly mixtape and weekend video.
All right. So when an advisor tells me that they don't have time to produce content, or they say they don't know what to say, I send them to this and I show them what you do with this mixtape. How long does it take you to produce these 15 to 30 minute weekly tapes?
Let's say it takes. So I am fortunate enough that I can usually, once I get going, it's one shot and done. So I'm not trying to get it perfect. I make mistakes and I keep it in there. And there's something about that authenticity that resonates with people. But so 15 minutes to record it. And then all the editing is putting the intro, outro on, and then uploading it to YouTube. I do those pretty much every Saturday afternoon or Sunday morning in the course of just a normal day. So it doesn't take that long. Now I have somebody who edits my podcast that takes longer and there's more to it, but the mixtape is really just honestly designed to be for my clients. I just put it out there for everybody as well. Cause what I want to be able to do is to take all this noise that's out there and say, hey, here's what this means, because not everybody knows what it means when rates go up or the Fed does this. So just break it down, because I know they're hearing about it. And that's one communication I have with every client every week, because they get a newsletter with that video. And if you go to the blog where I also posted on a little hack, if you want your clients to open your email every week and you happen to have a family and you're comfortable sharing, put your kids and pictures in there every week. So the weekend review video is a part of the weekly mixtape, which is the blog post. And at the very bottom of every mixtape, I have 3 pictures every week of the boys doing something. And I know my clients, some of them have told me, I only open your email because I want to see pictures of the boys, but then I saw this article or I watched your video. So I'm not above using the boys to get people to open my emails, but so I do it every week. Then the actual mixtape blog post takes maybe another 15, 20 minutes, because all that really is a collection of other great blog posts from other people that I think people should read. And that was early on, that was a hack that I created. So I wanted to have All About Your Benjamins, the blog, constantly have content on it. So my heroes in the business, the people who introduced me to content, is Josh Brown and the Ritholtz guys. Like, that's what introduced me to blogging when I was at the 403B company. And they are constantly cranking stuff out. And they have a team that does all the planning work for them. Like, that's their job, is to run the business and do content. Well, I have that team. I wanted to have that consistency. But I'm reading all these blog posts every week anyway. What if I collect the ones I think are the best, put it together in a blog post, and then share that? because that gives me a fresh blog post every week. And if I happen to write something else, that's great. But every week my blog post will have something, and I'm providing a little bit of value add by helping the reader not have to spend time finding out what's important to read. They just know, hey, every Saturday, every Sunday, there's going to be a blog post with 7 or 8 great blog posts. I'll just wait for that and I'll read that. And then it kind of builds a little bit of relationship with your reader. So don't overlook curation as a way of providing value when it comes to creating content. I mean, you look at abnormal returns. Tadas has done an amazing job with return. Maybe 80% of that is curating other stuff from around. And then every once in a while, he writes a little bit of original piece in there as well. Well,
Kit's his weekend reading. This team goes out and they write a short paragraph on why you should go read that article. And so it's a great strategy. It's worked well for Ritholtz. It's interesting how you have taken that and made it fit your brand and what you do and got it down into simplistic steps. I want to throw up your YouTube page because you bring up the Ritholtz guys, and they've done a great job with their YouTube page. Manish and I have been talking about how advisors aren't spending enough time on YouTube. Asset managers aren't spending enough time on YouTube. It is the #2 search engine in the world. If you produce content, put it out there, it will build a brand over time. I'm going to show your very popular Twitter page next, but let's take a look here at the YouTube page. You have 277 subscribers, yet you continue to grind out content every single week. Justin, what's the thought process behind that?
First off, I'm stubborn. I'm not going to quit, and I don't let the vanity metrics bother me. I would love to have thousands of subscribers, and I look at Josh and those guys, and like I admire what they do. I would love to do it, but that's my business is not the same. So as we were talking about beforehand, though, I would encourage anybody that video is one of the best ways, not only from the search engine side. Let's take that out of the picture. What better way can somebody who doesn't know you ahead of time get an idea of what you're about? They get to see your mannerisms, how you dress, what you sound like. They get to know you through video better than they can a written or even a podcast. So if you're thinking about video can help me grow my business with the right types of people, like they're going to be able to watch and see whether or not they like you. And if they don't like you, that's fine, because I think the ultimate goal of creating content to grow your business is to attract the right clients to your business. So my goal when I started the YouTube channel was to never have the biggest channel or the most numbers. I would love to. And I think there's things I could do better to get more subscribers, but I would rather have quantity over quality. And the way I look at it is there's 270 some subscribers. If some of those are clients, that's great, but other people aren't. I have a loyal following of 200 and some people who are watching my videos and listening to my podcast and the podcast as well. How much would an advisor pay to have an audience of 200 people that are checking in regularly to watch and hear what they have to say? Like, that's extremely valuable, and it takes time, and you're going to get frustrated with it, but for me, it's a lot of fun. And I'm not an aggressive person when it comes to business development. So I'm not going to cold call. I'm not going to do seminars. Referrals are great, but for me, that doesn't work. I'm more passive. So for this way, I can do stuff I enjoy. I can try to educate the public and along the way, pick up some clients who happen to like the way I view life and view things. And it takes time, but it pays off. And I will say that as much as I love content, that doesn't take away the other ways that advisors have historically grown their business. You can still cold call. You can still do seminars. Those are still very valid ways to grow your business. So I'm not in the camp where it's content or you're going to fail. But I do think looking forward, if you're a forward-thinking advisor, content's got to be in there somewhere as a part of the overall marketing package, because consumers are looking for it. And if you're not doing it, you're missing out.
I'd also say, and this isn't apples to apples, in my consulting business, I have not picked up a client in the last 2 years that was not a content consumer first. Maybe they had a need, they were looking, and then they came across the podcast or the YouTube channel, and they went through it before we ever had a conversation. So,
and while we're talking about building audiences, email newsletters are very strong as well. And I slept on email for a very long time. I did, because I hate getting emails. So I'm not going to do an email newsletter. But on the advisor side, my Advisor Tomorrow newsletter, that's the piece of content that I get the most engagement out of. I get emails back and forth. And so if maybe you're not as comfortable putting yourself out there in the public forums yet, start an email newsletter and find a way to bring value to a newsletter audience on a regular basis, weekly, monthly, whatever it may be, and start to build that list up. And then when you have that list in the future, you could start a YouTube channel and get them on there first. Like there's lots of ways you can do content that's not always a blog, a podcast, or a video. But email is very intimate, and I think a lot of people overlook that.
Robert Sophia from Snappy Kraken is coming on either next week or the week after, and Samantha Russell from 20 Over 10 and Lead Pilot, and I guess FMG Suite now, has been on multiple times, and I'm blown away by the statistics that both those organizations are able to show about email marketing, because like you, Justin, I slept on it for a long time. Just like Tyrone thinks that Manish is sleeping on Bitcoin because he doesn't spend enough time talking about it. Now,
so speaking of Manish, real quick, if you wanted, I listed some people that I was going to point out that would be good to look at. If you look at what Manish and Potomac are doing, they are doing a phenomenal job. And do not be surprised. I mean, and I don't use them. Like I'm never going to outsource my investment management. I love Manish. We have monthly calls, but I'm not going to use Potomac, at least not anytime soon. But do not be surprised if in 3 years might be too long. In a couple of years, they are not massive and so well known. And it will be because of all of the work that they're doing today. They are putting out some great content. They're having a lot of fun. They're doing their overrated, underrated news of the industry. Like they're doing a phenomenal job. Look at what they're doing and mimic that in your own way. Like there's nothing wrong with seeing and learning from other people and then tweaking it to your own way of doing business or your own business. So, I mean, I wouldn't say there's very much that I've done that has been fully created on my own. It's been looking at the successes other people are having, determining whether or not I think that will work for me and will I enjoy it, and then figuring out how do I do it. And I've done that with doing visualizations. I'm a big fan of Jack Butcher, who started Visualize Value, and he does these very simplistic, clean illustrations to share the story of complex ideas. I love what he does. And every once in a while I'll get a quote in my mind, or I'll get an idea. And I'm like, let me go see if I can draw that out on Keynote and create a visual. I didn't come up with that idea. I saw Jack do it, but then I figured out how to incorporate it into my business.
Yeah. All I do is copy people, Justin. I've been doing it from day one. In fact, when anybody tells me they want to learn how to market, I just give a list of folks, yourself included. I tell them just to follow and copy. And in fact, I first ran across you on Twitter. And so I want to throw your Twitter page up here for podcast listeners. I'll speak to it a little bit here. You have 8,000 followers. You're very active with your tweets. You've tweeted over 20,000 times, and your tweets are not self-promotional. If you go check out JUS10 Castelli, you will see that it is engagement, engagement, engagement. Justin, tell listeners and viewers a little bit about how you manage your Twitter account.
I manage my Twitter account to have fun. There is no thought behind how can this grow my business. And honestly, I view Twitter as a way to network and engage with peers. We're starting to get clients from Twitter, but that was never my intent. I thought I had a better chance of getting clients through LinkedIn, Instagram, other areas. But this is where I've made some of my closest connections. Tyrone, who keeps chirping in on here, I found him and Douglas Bonaparte and I have a Friday phone call, a Friday Zoom every week. Like they are two of my closest friends, and it started on Twitter. So for me, Twitter was about learning from other advisors, consuming other content, learning about what I don't know. And at the time I was working by myself, and then having fun and engaging with people. What I really want to try to use Twitter for is to continue to do that. But I'm a big fan of lifting up other people and advocating for others. So I want to find ways to highlight my friends that are doing a great job. If I can use my Twitter to shine light on a Jeremy Walter and get his phenomenal blog, Calibrating Capital, found, or Ashby Daniels, my friend, started this awesome company called Money Visuals, which is a monthly memo that basically he writes that you as an advisor can use to send to your clients. Make it all your own, and it'll be great. And he has visuals there. I would rather highlight other people, because the way I view our profession, a rising tide lifts all boats. So if I can highlight another advisor and they grow their business and they provide good service to other people, to clients, then our profession looks good. And if our profession looks good to more and more people, then we all rise with it, which is how the AGC came to be. Is, Taylor Shulte and I met on Twitter. We had a phone call like many of us do, just to talk and get to know each other. We stayed in touch, and we realized that there was a lack of a safe place for advisors to get together, to collaborate, trade best practices, have a sense of community. There's a lot of places you can go to get technology, to get CE, get all these other things, and the community ends up being a byproduct. And we thought, well, what if we made the community the reason people came in, and bring in guest speakers and some other values, but really make it about the community is why advisors would be, because a lot of advisors feel alone. It could be an island sometimes, whether you're an independent advisor or you are at a big firm and you view the profession one way and the rest of your firm views it another. You feel alone even when you're surrounded by people. And we just looked at, hey, we each have had over 100 phone calls in the last year, at least, with financial advisors. What if we put together a place we could all get together and share? And that's how the community came to be. And a lot of those people came because they knew Taylor or I from Twitter. And we just kind of moved it into a safe place.
And so membership is open now for the advisor growth community. For podcast listeners, visit advisorgc.com, advisorgc.com. Justin, walk viewers and listeners through what they'd experience if they join the community.
Yeah, so inside the community, there are over 140 advisors that range from just getting started in the profession to have been in the business 20 plus years. There are CFPs, non-CFPs, wirehouse, independent, RIA, insurance-based. The only requirement to joining the AGC is you have to have a CRD or the equivalent in another country. We're actually worldwide. We have UK members, Indian members in India, but you just have to be an advisor. We don't care about anything else. An advisor who believes in collaboration, an advisor who believes in we're better together and is looking to grow professionally and personally, because we have a personal component as well. So once you get in there, you're surrounded by these people, and in there, it's almost like a combination of Twitter and Slack. So there's a message feed. There's sections you can go into about different areas. We have guest speakers once a month. We have bonus guest speakers all the time. So we bring in people from inside the profession, outside the profession that we think can bring a lot of value to the members. We do a book club every quarter. Right now, we're reading the Almanac and Naval. So every other Friday, a group of us get together, talk about the chapters, and just have a book club, and really just try to foster this community and a sense of belonging. And it's been real cool. It's been more than what I ever could have imagined it would have been when Taylor and I put the idea together.
Yeah, I bet. I've heard great things about it. And again, for more information on the advisor growth community, visit advisorgc.com. I have kept you twice as long as a normal show guest, but can we do one more topic?
Yeah, and thanks for letting me stay this long. I was afraid I had to I've been trying to talk fast to get through quickly, but man, once you get me going, I don't stop.
No, man, this has been great. It's been incredibly informative because you have a very unique value proposition as an advisor to clients, and it's very clear in how you communicate it, which I really wanted to demonstrate to the audience. And then the way you try to serve advisors is second to none. Let's talk about your new course on the subscription model. I'm not familiar with it at all. I actually just came across it today. Tell listeners and viewers about the subscription course.
First off, thank you, Samantha Russell, for mentioning this on LinkedIn, which brought this up. So I'm going to be honest and transparent with everybody. I actually launched this course last November, and the course is designed to help advisors implement the subscription model. I think every firm should have a subscription relationship on their ADV. If you want to have a business that is going to be around in 20, 30 years, I think you need to have a way to serve young professionals today that's not tied to assets under management. Maybe you want to do hourly, maybe you want to do flat fee, whatever it may be. But from what I've found with my firm, the subscription model is very effective. Young professionals like it. And we have a very high retention rate within it. And now we're starting to see some of our subscription clients graduate up to the next level. So in my desire to try to make our profession better, serving more people, helping more people, I put together a course. It's 8 videos, and it walks you through everything you might need to know about subscription models. And the genesis of this all was all these phone calls I have with advisors wanting to learn about my subscription model. So I put it together, and the transparent part is I haven't sold that many. And what it was, I learned, so talking about marketing, I marketed this totally wrong. And it's a learning lesson. So I just thought, hey, I've got this audience of advisors that I've followed with, engaged with for the last few years, phone calls, newsletter. I'm just going to drop a course. People are going to jump all over it. And I didn't really market it that well. And I learned that even though you have this big audience, whether it is planning clients or other advisors, there needs to be a little bit more thought behind it. And I didn't do a good job of demonstrating why the subscription model is so important, how it can change their business, and then documenting the success that I've had. So I've started to bring it back up in this spring and summer when I get through all of our client reviews. I'm going to spend more time actually marketing the class, doing some videos, doing some targeted ads, to get in front of more advisors, because I do think that the subscription model could either help an advisor launch their own firm, have a way to work with people that's in their demographic that historically they wouldn't been able to work with. It positions an older firm as a way to have a succession plan and keep assets on board, whether that is getting in young professionals now or having a way to serve the children of your clients when they pass away. And I believe that a $500 investment in this class, you get one client out of it. It pays for itself multiple times over. So it's 8 videos. There's 3 PDFs, one of which is a workbook that if you fill out the workbook as you go through the courses, you will have your personal subscription model on paper. Now it's only up to you as the advisor to go implement it. And because I'm so afraid that people won't have success implementing from my course, I offer monthly office hours. That if you buy the course every month it's the 3rd Monday of the month, I'll hop on Zoom and we will talk about your subscription model. What are the problems you're having? What are the issues? How do we work through it? Because the tough thing about a course like this, since it's all video, is there's a lot of details that are advisor centric that I can't cover. So this is the high level, this is the infrastructure, but there's a lot of things that we could talk about more in a quick conversation that would actually help an advisor have more success. And I can't do that through video that's recorded. So the only way I thought was, all right, I got to have office hours once a month to be able to help make sure people have success, because the course isn't designed to be a money grab. I would love to have another income stream. That's awesome to diversify things out. But I really want to have a bunch of advisors that look back and say, that was the best $500 I spent. It helped me at a new level of my business. I'm helping more people. I'm growing. So I want to make sure that people have success with it, which is why I want to have those office hours as well.
Where could listeners and viewers find out more information about the course?
Yeah, it's on Gumroad. So if you go to gumroad.com and just put in my name, Justin Castelli, it'll pull up my profile and there's that. And then I created this little downloadable PDF to help you organize content creation as well. But it should be on the Justin Castelli website as well. If it's not, I'll put it on there quickly. You caught me off guard on that one.
Well, so I see it on Gumroad. I just thought maybe there was another place that they would find it, because I'm sure I didn't find it through Gumroad. So I actually think you can find it at your personal website as well. Mm-hmm. Mm-hmm. So another proof point for the subscription model, and I unfortunately had this argument with advisors on a regular basis, the idea that you should at least add it to your ADV and that it is the future. I tell you, when we could go to conferences back in 2019, I went to the XYPN annual event in St. Louis. And it was very clear that subscription models are going to be here someday, not now. It's not going to upend anybody's career, but not having it inside of your firm could put you at a competitive disadvantage down the road. Justin, I'm so grateful for all the time you spent with our audience. I really appreciate you coming on. I enjoy all the work you're doing, and especially the way you're supporting advisors.
I appreciate it, Jay. Thanks for having me on. And thanks for doing this show to help other advisors. For one advisor who enjoys helping other advisors, it's great to see people who are trying to help move the profession forward. Because at the end of the day, that's what I want to see. I want to see our profession respected rather than distrusted. And the more that you can empower other advisors to improve their businesses, take better care of clients, and make our profession look better, again, a rising tide lifts all boats. So I want to thank you for doing everything you're doing as well.
Back at you, Justin. Thanks for coming on.
Thank you.